So this is the exact trade that we're going to be breaking down in this video. But before that, I want to explain to you the actual trading strategy, which is insanely simple. It's 3 simple steps. So we'll go through each step individually, and then we'll go and apply it to this specific trade breakdown that is covering this strategy. This is a trade that one of my best students, Ralph, who made $50,000 in the last 3 months using FTMO, actually took live, which is also the trade that I took live. So let's dive deep into this trade and, more importantly, this step-by-step strategy. So 3 simple steps. Step 1, session bias, which is essentially understanding what is price going to do today in this session. Step 2, liquidity rate. What's an area of price that we can wait for price to liquidate before it reverses? There always needs to be a liquidation. And step 3, lower time frame confirmation. On the lower time frame, what can we use to confirm that we are correct? Now is time to enter this position. And that's pretty much it. Let's start with session bias. So this trade takes place on the 8th of April. Now, what you want to be asking yourself when you first come into the market, when you're scalping, is what's the bias of the session? All you need to care about is what is going to happen in this next couple of hours. That is the most important thing. And so for me, to understand session bias, I need to understand some type of market structure. So this is what I'm looking at when I'm understanding price. What I can see on the 15-minute time frame, which is a time frame I use for my session bias, I can see that we're obviously aggressively bullish, right? We've been very, very bullish on euro dollar on the 15-minute time frame and on all time frames for the past multiple weeks at this point. But what we're starting to see as we get into the details of the days is we're actually in a pullback phase. So you can see that price is starting to put in these lower prices, right? That is ultimately what I'm seeing. And so what I want to do is, can I dive into little swing points that clearly tell me what's going to happen today? So what we can see is we topped out up here, which also has some higher time frame relevance that I won't get into in this video. But we top out here. Then we go and put in a low. Then we go and put in a lower high. So this high is lower than the previous high. That automatically tells us that at this moment in time, we are likely bearish in our order flow. So then we go and put in a lower low, meaning that this low is lower than the previous low, clearly confirming the bearish price action. Then you can see we pull up, we respect this high, then we go and put in a new low. So now we have a lower low. Again, still bearish. Then what we have is we go and put in a lower high. So this high is lower than this previous high, and then a new lower low. After that, we actually go and put in a higher high. So we actually shift internally bullish, which, to be honest with you, we're still extremely bullish. So this could be a time to look for buys. But ultimately, that's not what price ends on, because when we come down, we respect this low, and then we go and put in a new higher high. So now we have low to high. That is what's controlling price. But what happens? We break this low down here. That gives us a little market structure shift to the lows, which also creates this low. So we have a low down here, which is a lower low. So this low is lower than the previous low. That indicates to me that as of right now, we are trading from the high up here to the low down here. Very simple. I understand that my current context range is high to low. So what am I expecting in this session? I'm expecting lower prices. If this is the high that's in control of price right here, and this is the low, and if I take my fib retracement from the low up here to this high, what I can see is that we have now entered also into the premium of the price leg. So 50% of this region. The ideal area or the optimal area for a lot of this is kind of this in between this 618, 786 area. But honestly, this is just an extra confluence. So we have our fib, we're inside of the premium, we have our bias. I'm clearly expecting lower prices. Now, step number 2 is liquidity rate. I need to see some type of liquidation when I get into my London session. Why is that? The market needs to go in one direction first before the other direction. Ultimately, what happens in that process is if London session opens up bullish, well, all of the London people are going to be looking to buy. And if the market really wants to go lower, then the market can use that liquidity to position people who actually want to go short. And the ones who are going to come out on top are the ones who have the most control. And if we read that the bias for this session is to go lower, then guess what? Sellers are the ones who have the most control, most likely. So we're looking for a liquidity raid. Now, for me, the best setup for London session specifically as well is when London manipulates Asia high. Ooh, that is incredible. Inside of a premium price leg, oof. So that's what I'm looking for. That is my run on liquidity. So right here, we have Asia session high in this blue box that represents Asia session. That is our liquidity. So we are currently right now 145. Next 15-minute candle, there you go. That is our London open. So if I go down to a 1-minute time frame, right, which is how we're going to get a lower time frame confirmation, what I can see is that we've had that liquidity raid. So step one was directional bias, right? Our directional bias, and then we had our liquidity raid. Liquidity raid was the run of this high. Now we've had that bias, it's bearish. We've had the liquidity raid. Now we need to have a lower time frame confirmation. So simply a lower time frame confirmation is just price moving, as you can see on the 1-minute time frame. If you're looking at this, you can see that price is bullish on the 1 minute. What I want to see is price shift from essentially being bullish on the 1-minute time frame to bearish. When this happens, that tells me that now is time to act. I don't want to be trying to sell when the market is continuing higher. But the moment that the market shows me weakness, so it has this move and then it kind of just does this, and then it shows me its weakness, that's me going, confirmed, it's time to go, let's act. That is what I'm waiting for. So at that point, that's also what my school members are waiting for. So every single day inside of my community, I actually share before London Open and before New York Open exactly what I am looking for on every single day. So that's ultimately why many of my students end up taking the same trade as me, like Ralph, who I already kind of spoke about. If you want that kind of handheld guidance where you're watching someone who's doing this day in, day out to understand what they're doing, plus all the strategies and everything else like that, then below this video, I'll leave a link. You can book a call, speak to one of our trading advisors and understand whether or not your current situation could be helped with our help. So back to the video. Essentially what we're looking for is a lower time frame shift. You can see that price is still developing bullish. And now what do we have? A very aggressive run of a high. That is a clear indication of a liquidation, but still doesn't give me the sign that I want to see. So now we have the run of the high. So now at this point, what I want to see is a run of this low. And I'm just monitoring price to see when I'm going to get that reaction. Okay, we're still bearish. Create equal highs in there. Okay, cool. So price is entering the level. Okay, there. That is my confirmation. Because what have we seen? We've seen price go from being bullish to stalling to shifting bearish. That's my confirmation. And it's that simple. Let's go to a 15-minute time frame. We can see that price is intentionally bearish. We've had the run on liquidity, right? So we've liquidated Asia high, but guess what? We've also liquidated these old equal highs that we had at New York session from the previous day. So previous day New York high has been very slightly manipulated, which is also another great benefit. So now we're going to 1-minute time frame is bearish. It shifted. Now I need to find an entry. Usually the reason I call this a 5-minute scalping video is because I'm looking for my entry on the 5-minute usually. And what I'm looking for is a fair value gap or an order block. In this sense, you can see the fair value gap, right? Very clear. For those who don't know what a fair value gap is, a 3-candle formation where the second candle, the middle candle, has a clear gap between 1 and 3. That shows you that there is a liquidity void at that level. Very, very simple. It's essentially an imbalance between supply and demand. That imbalance is likely to get filled. So what we're looking for is to trade short from that level because it's the highest probability area that will be retested before price continues in its direction. So that's our entry point. That's our entry. My stop loss is above this high. My stop loss and your stop loss should always be placed at a place that invalidates the trade. If price trades above this high, that trade idea is over. I no longer expect this specific trade idea to play out. So why would I want to have my stop loss any higher than that? So stop losses are always invalidation points. So what about target? Where would we look at targeting? Well, if we go back to the 15-minute time frame, we can see that the low that we currently have is down here. A bonus is this is equal lows. Another bonus, this is Asia low unmanipulated. So there's a bunch of liquidity that's sitting at these lows. So that makes the perfect exit. And so we're looking at taking out the lows down here. And that is a 6.5 risk to reward, meaning if you have a $200,000 account and you risk 1% of your account, you're going to be making a little bit over $13,000. And that's exactly, I think, how much Ralph made on this specific trade, if I'm not mistaken. I know he took a $23,000 payout, which was a couple of days ago, and I think 13K of it came from this specific trade. But let's play this out. So let's go to the 5-minute time frame where our fair value gap is and our entry is, and let's literally just see how this trade plays out in real time. There you can see the next 5-minute candle perfectly tags into our fair value gap, right? And then immediately begins pushing away. When you're a scalper, when you're scalping, ideally you want to see an immediate reaction from your level. That's what makes it a solid trade idea. So session bias, I expected that this session would be bearish. Step 2, liquidity raid. After we raid on some kind of liquidity, that liquidity is Asia high. And then finally, step 3 is our lower time frame confirmation. So what you've seen on the 1-minute time frame, that was our lower time frame confirmation. That's what told us that price was now getting ready to go short. And what you can actually see here is that during London session, we come down and test this low. We take out Asia low, but we don't take out these lows in here. And again, this creates more liquidity. Now, guess what happens? A lot of traders out there, ones that only have a technical edge, right? This is a huge difference, and something that I have a 27 long course module, hours and hours and hours breaking down the psychology of trading. But do you know how many traders who would have been in this trade, and then the moment that they seen price coming back up here and the New York session starts and price gets around here, do you know how many of those traders would have closed this trade here and taken maybe $3,000 instead of the overall $13,000 that was up for grabs? And the reason is because of psychology. Price starts reversing against them, even though they know that logically that's fine because that's a part of their plan, they act emotionally. And so instead, they would have been getting out there. And for the traders who actually have control of their mindset, they would have been able to hold this position all the way to the logical trade area to be able to make this trade a winner. So you need both a strategy and psychology combined in one. And like I said, if you want to work with me, my team, and actually get that dialed in for sure, you can check the link in the description and see if we can help you.